Good morning. What's up, here to learn and share? What's going on, Hines? Y'all popping up in here like y'all true members of the gang. What's happening with you? Anybody that's pulling up on IG, go to YouTube. Go to YouTube, youtube.com/the new TLR. Or just go search Tim's Tidbits or something. But youtube.com/the new TLR. Pull up on YouTube. Come hang out with your boy. You hear me? I was gonna do this with the gang, but I decided, hey, what's up, Lil Hulk? What's going on? I decided I want to do, you know what I'm saying, a video with everybody because when was that? Was it yesterday? Night before last? Sometime I popped up on the live with Mo. It was Mo, Mark, Lawrence. They was talking. What's up, Deborah? And I popped up and they asked my opinion about, the market. I don't know what they was talking about the whole time because I popped up. But when they, they asked me to jump on and share my opinion about the market. And y'all know I speak extemporaneous, so I said whatever I said, but it kind of sparked in me to want to do a video with everybody and just let people know, man, it ain't no secret. It ain't no secret. It ain't no magic wand. It ain't no the next best thing. When it comes to investing and trading, it all boils down to doing the work, risk management, analyzing the price. And I don't care if you're a fundamental trader. I don't care if you are a patterns trader. I don't care if you are ICT trader. I don't care if you are indicator trader. I don't care whatever you are. It all boils down to doing the work and finding your edge. Finding your edge. That was yesterday. Appreciate that. Black Al Davis. It was yesterday. Y'all know my days be running together. It was yesterday. And so, I just want to talk about that while we look at the overnight price action. Just want to talk about that, man. Yesterday, I shared with the gang another evaluation that I passed, and I decided to share on Instagram publicly. I said, what stands out to most? Well, let me see. What did I say? Hold on. IG, I'm about to hang up on y'all because my little brother called me. So y'all getting hung up on IG. What's up?
Oh, you working? I didn't know you was online.
Yeah, I'm on live right now. What's cracking?
Oh, okay. I was just hanging up, see if you went on the
Are y'all back? Is it? I don't know why. Whenever I get a phone call on IG, it like messes up my it messes up my live. And it can't come back. I can't get it back. It messes up and it won't come back. I don't know why. So I'm just gonna have to end it because it won't come back. It just glitches the whole time. Do anybody know how to make it stop glitching? Like if you get a phone call, because I see some people get phone calls, they be like, oh, I got a call. I'm sorry about that, y'all. But I can't, I don't know how to do it. Anyway, now I can look and see what I asked. I said, what on this trade report sticks out to you the most? And I had success percentage, max wins versus losses, number of trades, WTF is this, right? 32% said success percentage. 20% said max wins versus losses. 24% said number of trades, and 24% said what is this? Like they didn't even know what the trade report was. But and it wasn't no right or wrong answer. Good morning, Lewis Mitchell. Good morning, truly thankful. It wasn't no right or wrong answer to the question. I just put it up there to see like a mind frame, like where the people what's important to the person, right? What's important to the person. So 32% of the poll success rate is the thing that stick out the most, because whatever stick out the most to you, that's what the most important. That's what catch your eye, because everything is, you know what I'm saying, it's not huge. Let me pull up the, do I got the picture over here? Let me pull up the picture so y'all know what I'm talking about. We gonna get into the overnight price action. Don't worry about it. Don't worry about it. I don't be in no rush to do nothing. Y'all already know how I do. Right? Y'all already know how I do. This the picture that I shared right here. This the picture that I shared right here with everybody, right? Blow it up big just in case y'all on y'all devices and y'all can't really see. Y'all can't really see everything. Okay. So I'm blowing it up big in case y'all on y'all devices and y'all can't see. All right. As you can see, it's for an eval account. I got my number blocked out because the way Apex do it, they have your number in there, your actual Apex number in there, and then the end will be like the number of accounts you've ever tried. You know what I'm saying? The number of accounts you ever tried. If it's a PA account, if it's a PA account, it'll say PA. It'll say PA Apex with your number, and then the number of PA accounts that you have passed. Like it'll be 01, 02, 03, like that. And then for the eval accounts, it says Apex with your Apex number and then a number at the end. You know what I'm saying? So I blocked that out because I don't know what you can do with your real Apex number, but I ain't putting mine out there. All right. So I said, what stuck out to the most to you on this report, right? And for anybody, and for the 24% that said, what is this? Good morning. My name was given. Appreciate you for pulling up. That's my first time ever seeing that. If this not your first time pulling up on Tim's Tidbits, I truly jollipies, but I try to remember the names, and I ain't never seen that name before. Not that I can remember. So welcome. Same thing to you, truly thankful. Welcome. If it ain't your first time, I jollipies, but welcome. Now, what's up, Laverne? What's going on, Sanjay? So, if you don't know what this is, inside NinjaTrader, you can pull up a performance report, a trade performance report, whatever they call it. You go on to new, scroll down and say like trade performance, whatever. And you can select the date and time range that you want to go through. You can select different instruments. You can select templates if you got any. And then you can filter it by the different accounts you got inside your NinjaTrader, right? You see the one check right there. I squanched this up much as I could so that I can only show that, but it still was some other stuff showing, so I blacked it out, right? So I got the one check next to that, and then you can look at one account at a time or all the accounts. You can look at it, and then it gives you a report, right? It gives you a report for that time frame right there, the time frame that you select. It gives a report of what your trading was like, right? It's a pleasure and part way being locked in with you. Okay, then you from PDub. You must be you got to know my brother there. If you from PDub, you got to know my brother. You probably my brother homeboy who he told me was be tapping in with me. But yeah, so it give you your performance over that time. And the reason why I shared this was because I was talking to the gang about another evaluation that I had just passed, right? And then I said, hey, I decided I want to share the tail of the tape with y'all, right? Just so you can see what I did to pass this account, right? To pass the account with the 2,500, you got to make $1,500, right? And if you don't understand how Apex work, for the $2,500 account, you got to make $1,500, but you can't lose no more than $1,500. If you lose more than $1,500, you blow the account. All right, so you got to make $1,500 before losing $1,500. And you say, oh, okay then. Yeah. That's what's up. Appreciate you for tapping in. Right, on the 25,000, right? If I said 2,500, I messed up. 25,000 account. Appreciate that, Stacks. Right, on the $25,000 account, you got to make 1,500 before you lose 1,500, and you got to do it over 7 days. Right, so you got to do it over 7 days. So if you're going out and YOLO one day and make 1,500, you still don't pass, because you got to trade for at least 7 days before you can pass, right? You can trade long as you want to, but you got to trade at least 7 days before you can pass. Okay, so what I do when I'm doing these evaluations and when I'm trading inside the like the PA accounts, I trade it totally different. But the PA accounts, I trade it real slow. But with the evaluations, right, I divide 1,500 by 7, and I see how much I need to make over 7 days, like 7 consecutive days, right? If I was to trade 7 consecutive days, I want to see how, so I go 1,500 divided by 7, right? That means I need to make $215 per day for 7 days of trading, right? And then I say, okay, is that too much leverage to be trying to go for? Right. So, okay, if I'm trying to do $214 a day, if I'm trading micros, that's a pretty big move. That's a pretty big move if I'm trading micros. So I want to break it down to a number that's more manageable. So that's all right. I got 30 days to do it. Let's go a half of 30, because they're gonna renew on me in 30 days. All right. So 1 divided by 15. That's $100. That's $100 over 15 trades. $100 over 15 trades. So you got 30 calendar days to do the account, and it's roughly about 20 or so trading days in the month, right? Roughly like 20 or so trading days in the month. So I need to get at least $100 over 15 trades to pass it. All right. So what I do, I start out with the micros. As you see down here, I took a total of 16 trades, and I was 75% strike rate. Right. On the long trades, I was 80%. On the short trades, I was 66%. I could see the longs better than I could see the shorts. I've always been like that. Y'all heard me say in the past, I'm not really a put person. You know what I'm saying? I can play puts every now and then, but I'm not really a put person, because I can see the longs better than I can see the shorts. I know my vices and my strengths. So I posted this up, just ask people what stuck out the most, right? Everything on here is white or gray except for the losses. So when you look at something, your eye is drawn to the brightest thing, right? So the brightest thing on here is red. The brightest thing on here is red. So your eyes are drawn to the brightest thing. So that's why I just shared and was like, what stick out the most to you on here? And I gave choices. Success percentage, right? And that's right here. This right there. That's the percent profitable. Right there. Max wins versus max loss, right? Here's your max. That's your gross loss. That's the max drawdown. So right here, this is the gross loss, and this is the gross profits, right? Max wins, max loss, right? Gross loss, gross profits. This the max drawdown right there. Okay. Meaning like the biggest amount of drawdown that it took, right, was $48.69. That was the biggest amount of drawdown that it went against me at any point in time. So at any point in time, the biggest drawdown that went against me was $48.69. And then that's the max drawdown over all the trades, right? And then the number of trades, 16 down here. And then what is this? So I already explained what this was. So as you see, the brightest thing on there was the losses. So I said, what stick out to you the most? And that put you in the mindset of what's more important to you. So 32% of the people, the strike rate, success percentage, percent profitable, whatever you want to call it, that's what stuck out to them the most. Because that's what speaks to them the most. That's what's more important to them. Now, there's no right or wrong answer. 20% of the people said the max wins versus the max losses stuck out to them the most. That was like, that's what spoke to them the most. Over the max amount that was made, 1623 versus 99 that was lost. That's what stuck out to them the most. And then the number of trades, 24% of the people, number of trades, that's what stuck out to them the most. Is it a right or wrong answer? No, it's not a right or wrong answer, but it's all about mindset. What is your mind focusing on? What is your mind focusing on? For me, looking at it, the strike rate and the max drawdown would kind of be like a draw to me, right? Like the max drawdown, I didn't put that on the list, but the max drawdown and the strike rate, that's like a draw to me. And the reason why I say it's a draw to me is because I want to see, am I following a system that's statistically successful, right? C's get degrees, right? Overall, C's get degrees. I know my strengths. I see the longs better than I see the shorts, and it shows here, right? Now, in stuff like this right here, this just popped in my head. Y'all hear me all the time saying, well, I used to say it a lot back in the day, but I used to talk when I was doing options. I was like, I don't really, I can do puts, but I'm not really a put person. I just wait for it to come back to my level that I want, and I buy my calls instead of trying to play it both ways, right? I just wait for it to come back to my level and buy my, I say that all the time. And now you got, this is proof from an account that I was trading that shows you that what I said, that what I said was true about myself, that I understand that about myself. 80% going long and 66% going short. This is proof that I understand me. You know what I'm saying? Not that, oh, this proof that I ain't capping, this proof that no, this is proof that I understand me. It's like we got to stop making our trading about other people. We got to stop making, thanks to Lex, I done went down a rabbit hole yesterday on Twitter because she tweeted something with ICT renting in his car So now I'm in a rabbit hole trying to figure out what's going on. And I see him and M7. The same, y'all remember I told you about the dude that got on when I was on the Twitter space with Kit, and the freaking dude M7 got on there and pissed me off. Remember when I was ranting about that? Where him and ICT was going back and forth, and now him and ICT got this whole big competition. They supposed to be like M7 accepted the challenge. How Michael always be like, get into Robbins and I'll mop you. So M7 accepted the challenge, done sent me down this whole rabbit hole yesterday because of her. But everybody named Mama is excited about this. Like, who cares? Stop making your trading about your favorite trader. Make it about yourself. Understand you. This ain't even what I planned on getting on here and talking about, but this is what I'm talking about now. Let me pull my mic over here so I can sit back and talk, right? This right here shows you that Lil Timmy Rogers has done the work on Lil Timmy Rogers, because you heard me say in the past that I play calls better than I play puts. Anybody that's been around for a long time heard me say that. This account that I was trading over this time frame here from the 1st of October to now, I just went back to the 1st of October. I can't remember exactly when I signed up for the account, but I just went back to the 1st of October, right? This is because it was in October sometime. I think it was October 5th, if I ain't mistaken. I think it was October 5th. So I went back to the 1st of October until the 25th, right? And yes, it was October 5th because it said it was going to renew on November 5th. And based off of the data in this one account right here, out of 16 trades, I had a better strike rate on the longs than the shorts. That lets you know that I understand me. I took more long trades than I did short trades. I was better at the long trades than I was at the short trades. Did I shy away from the short trades? No, I didn't. Why not? Because based off my analysis, I saw my setup. What was the cause of the losses? Some of them was I was just dead wrong. You know what I'm saying? One of them I was just dead wrong, and one of them my stop was too tight. I was dead wrong, and my stop was too tight. Got wicked out like 1 or 2 ticks on one of the trades. It was like 1 or 2 ticks got wicked out, and one of them I was just dead wrong. But this shows that I have done the work on myself and I understand me, right? And then I said the max drawdown, the success rate and the max drawdown, they are like a tie, right? Looking at my max drawdown, and you see I'm not, it's like it's not running against me forever and then coming back, and then I get out the trade and be like, whoo, I won the trade. Now I'm sticking to the rules. Y'all hear me preach all the time. Keep your losses smaller than your wins. Right? Keep your losses smaller than your wins. There you go. Keep your losses smaller than your wins. This is the gross loss. This is the gross what's the name? And it's a staggering difference between here. Staggering difference in between here. Now, most of the trades that I was taking in this account was on the MES. I did take some trades in the ES, but I didn't take those trades in the ES until I had built up a little cushion into the positive. Why? Because I can only lose $1,500. I can only lose $1,500. And that $1,500 follows you. It follows you. It's not a static account where if I get up 500, now I got 2,000 I can lose. No, I can still only lose $1,500. So the whole time I can only lose $1,500. So it's like it was sparingly. I used the ES sparingly in here. That ain't even what I really want to talk about. But it ain't no magic wand. It ain't no one trick pony. It ain't no next best thing. It ain't no, hey, what is ICT gonna teach? Hey, what is Tim gonna teach today? It ain't none of that. I promise you. Everything that I know about trading, I have shared it on this channel. So like the teaching part of it is kind of like, I ain't gonna say behind me, because I'm always learning something new, and if I learn something new, I share it. But like it's in the, like I used to always tell the gang, we here now, we sprinting, standing straight up, head back, running, right? We sprinting now. It's all about doing. That's why I basically just get on and I talk about what did the price do. It's all about doing. All right, let's look and see what price did. We came down last night. We opened up 90% off for your limited time to use the link in the description. Oh yeah. If you, I appreciate that, Stacks. If you are now, please, evaluation accounts, prop firms, combines, whatever you want to call them. This is only for people who are consistent. If you got a model already, you don't have to be an ICT trader. You don't have to trade what I trade. If you got you a model already and you are consistent and you want to take a stab at trading an evaluation account, Apex has 90% off sale right now. I got an affiliate link in the description. Appreciate Stacks for pointing that out. The link says 50%, but all the links are 90% off now. If you use that link, I will get a couple dollars off of whatever you purchase. All right. So right now it's 90% off. So if you want if you want to try a $25,000 account right now, it'll cost you, how much is the 25,000? Like 137, I think it is. Is it 137? Let's go look and see. Let's go look and see. You got right here. You got 12 days left. Got 12 days left, 90% off. If you want to try 25K, like I tell people all the time, you don't have to use, like, you don't have to get these big accounts. You don't have to. And the reason why I say you don't have to get the big accounts is because like this 25K, right? You got to make 1,500. You can't lose 1,500. Right? And then the 50K, you got to make 3,000. Right? Got to make 4,250. Like the higher you go, the more money you have to make to pass it. Right? But no matter if you dealing with 25K, 50K, 250K, when you pass it, you have to pretty much pass it again before you can start withdrawing, right? Because on any of these accounts, once you pass it and get a PA account, you got to get the same amount again plus $100 before you can start withdrawing money. And then once you get that amount again plus $100, it behooves you to not withdraw anything and make it go below that amount, right? So for me, once I get it to 1,600 above 25K, so 26,100, right? I don't withdraw anything until it, you know what I'm saying? Like, just say 26.6, then I'll take 500 out. So I still got a 26.1 there. And then if it, you know what I'm saying, I want it to stay at 26.1 at the minimum. You know what I'm saying? Because you want that cushion to be in there. And no matter which account you got, the first $25,000 is yours. So it ain't no need to try to go out here and get these big accounts so that you can over leverage and try to. The first 25,000 is yours. All you got to do is just trade smart. So why not go for the smallest one and just trade smart? The market ain't going nowhere. The market ain't going nowhere. And then you can get multiple 25Ks. Look at it like this right here. You get multiple 25. Just say you got 5 25K accounts, right? You got 5 25K accounts, they PA accounts. You trading them slow, right? You trading them slow. You done got all 5 of them up to $26,100, right? Don't you know, with 5 accounts, if you made $100 per week in 5 accounts, that's $500 extra. And with a micro where you risking 5 points to make 10, right? 5 points to make 10. All you got to do is have at least 2 winning trades over the whole week. 2 winning trades over the whole week, and you got an extra $500 in your pocket based off of having 5 25K accounts. That is the least amount of stress in the world. But our problem is we trying to get rich quick. So 147, I came here to do the math. $147, 147 minus 90%. So right now, you can pretty much $15. Right, pretty much $15 to sign up for a 25K account. Let's do it again. 147 minus 90%. Yes. $15 right now to sign up for a 25K account. Those the ones I that's all I do. I just sign up for the 25Ks. That's it. That's all I do. I ain't got time to be trying to make a whole lot of money. I don't need to be over leveraging. I don't need to be trading 10 contracts here or 12 contracts there. I don't need to trade all that. And then people go out there trying to trade like they see ICT or Michael trying to see trade. Now they put, like, you see, if you put 10 contracts on, right? You put 10 contracts on, so every point is $50 on the ES. So 50 divided by 4, right? $12.50 per tick. If you got 10 contracts times 10, that's $125 per tick. If you got 10 contracts on, right? $125 per tick. You know how quick a tick can move. And then $500 per point. $500 per point. With a $2,500 loss limit, 5 points blows your account with 10 contracts on. 5 points blows your account with, and you know how quick 5 points can move against you. Get rich quick ain't the game. Anyway, I ain't mean to get into all of that. Let's talk about what price did overnight. It's almost 10 o'clock. Time to start watching the price for real. Okay, so overnight we gapped down. We gapped down to 42.02 even. And then the Sydney and Asian session proceeded to go straight down to this daily fair value gap that we had left down there, just below this. That's the monthly order block line that we have marked out. Let's go up for anybody who don't know what it is. Anybody that, hey, what's going on my screen? Good morning, Rhonda. Right there. That's the monthly order block right there. The opening price of the monthly order block we talked about. Right. This is our beginning of the last line of defense. Right, because we got the order block here and we got this order block over here. We got this breaker right there. It's all pretty much in line. So this whole balanced price range right there, we got key levels we're watching inside here for our last line of defense for this bullish retracement on the monthly. We had a bullish break in market structure, got up here to the rejection block. Now we're coming down. We're at discount PDA rate on the monthly, right? So we're watching the monthly, how it plays out. This is the order block on the monthly right there that we marked out that we're watching. You know what I'm saying? For all those who know, you got mean threshold of this order block, mean threshold of that order block, mean threshold of that breaker right there. So those are the levels that we're watching on that. We're back here to that right there. On the weekly, right? We're saying on the continuous contract, this gap does not exist on the continuous contract, but on the front month, which we're using here, this is the December contract. There's a gap there. So, just taking this gap with a grain of salt. Will we get down to that weekly gap? Is it will the algo see it as a real gap? I don't know. I just marked it to see what it does. We're at a monthly level. We got a weekly gap down here that may or may not exist. We talked about that. We've right now, well, tomorrow's not, the week's not over yet, but we got this weekly order block here, and we got another order block there on the weekly. So we've pretty much pushing through this one here to get down to this monthly order block level, which is reasonable because it's a monthly order block with a weekly order block is reasonable for it to get pushed through. Now we got a weekly order block down there right around this fair value gap that may or may not exist because the continuous contract doesn't show it, but the front month does. Waiting to see how that plays out on the daily. This is the daily fair value gap right there. The one that when we talk about this all the time. When the market comes down into a fair value gap and leave a little piece like that, I always anticipate the algo coming back to get that little piece. And we came back, we got that little piece, came down into this daily order block right here on the 4th of May. Came to that daily order block there. We put a line across there, right there. Boom. Got into the sensitive area of it, the wick. Y'all know what I always say, that's the most sensitive part of the order block or the breaker, from the wick to the body, from the wick to the opening price. Got down into that. Thus far, having a reaction off of it. Will it stop? The way price is moving right now, right? The way price is moving right now, if I was a betting man, I would assume that we're coming for this imbalance down there. Why? Because we have liquidity under there based off of the front month. Does it have to get there? No, it don't. That's why I tell people all the time, I trade what I see. I'm trading without a bias right now. I just trade what the order flow gives me. I trade what the order flow gives me. All right. Right now, we're pushing bearish on the daily. I like to look at what is the sentiment right now for each time frame. Let's go back and do that real quick. Go back to the monthly. The monthly right now, again, like we said, we still in a retracement, right? We're in a retracement. So if you're in a bullish retracement, that puts the monthly in a bearish sentiment, right? So it's bearish, but it's a bullish retracement. So you want to see how it reacts to these areas, right? You anticipate it to come from here to here. Now that we're here, what will it do, right? What will it do? The monthly has come to a discount PD array for this bullish retracement. This bullish retracement is a bearish sentiment. Now that we've gotten here, what will the monthly do? The monthly is at a point where you like, hey, what we gonna do? Right? What we gonna do? On the weekly. The weekly, It's still bearish. It's bearish, and as of now, it's still trying. Like it has disrespected this. Well, it's disrespecting until this week close. We can't say it has disrespected because here, this week, and this week, it respected. Turn on my fancy dancing. It respected this discount PD array, right? The order block. On these closures, it respected this order block. Now, this week isn't closed yet, so we can't really say it has disrespected it yet. It is disrespecting in the midst of it, but we can't say if it's disrespecting this until the close on Friday, right? Because we can easily come down here and bounce back up, or we can stop here and keep going back up. You know what I'm saying? Anything. So it's bearish, but it's still showing respect for the discount PD arrays. Right, still showing respect for and that's going to come in line with the monthly at a point of what you want to do. I've reached my discount destination. What do you want to do? So now the weekly is showing a little respect for the discount PD arrays. Still bearish. It's still bearish, but it's showing respect for the discount PD arrays. On the daily. Okay, so the daily, we came up, we had a bullish break in market structure, but we came back and took out the low. So boom, Judas swing, right? Got hit with the Judas swing, went up, came down, right? Judas swing on the daily, breaking market structure to the upside, came back, took out the low. Judas swing right there. See right here, we took out that low there, pushed back up, came down there to that daily imbalance right there. And then, like I said, if I was a gambling man, I would say we were coming down here. That's where my eyes are looking until proven otherwise. Right? Why? Because it's a weekly imbalance down there, and this weekly imbalance does not nullify its retracement for the monthly. We can easily come down to that imbalance, take care of that imbalance on the weekly, and still be within the range of this monthly to not negate this as being just a retracement. Because if we pulled out our Fibonacci's from the low to the high and put it on OTE, right? A 70% OTE will put us down at 41.46. Let's go back to the weekly and see where all this is. That weekly imbalance is still within the OTE range, 62, 70, and 79. All of that is your optimum trade entry range. All of that is still within the OTE range if it decided it want to come all the way down there. Because the way you use OTE, right, on this week here, you would have gotten long already on the monthly higher time frame for using OTE, and your risk would have been down here to this low. So on a big scale, you would already be in on 62%. If you're 70%, you're waiting for it to come to 41, 46, 75. If you're 79%, you're waiting for it to come to 40, 77, 50. Right, so it can still come down to that, and still be a retracement. And what would that do? That would come down and take all of these. That would be a dirty trick to come down and take out all of these stops up under this low. Excuse me, up under this low, and then reverse on them. A lot of liquidity resting up under them lows right there, and then reverse on them. That would be a dirty dog trick. Now, back to the overnight. Overnight, we it sold off into the it's 10:04. Let me let y'all get out of here. Consolidated for midnight, push down, wick back up, poked above midnight. Okay, coming into the London right here, at the London open, we push down, and went back above midnight. And then coming into like the 7 o'clock candle, we came all the way back down, didn't take out the low. Then the news took us up to take out the buy side. Right, took us up, took out the buy side. We pushed up into the new day opening gap into the void, the liquidity void that we left on the gap. Let's look at the opening range. All right, let's look at the opening range gap. So this is the opening range gap here. All right, so for our opening range gap, we got, yep, that looked like we got back to consequent encroachment. Just up to almost the consequent encroachment. We came up to 4205 even. We came up to 4205 even, and looked like the consequent encroachment maybe 4250. I need to get a Fibonacci to see exactly. Let me get a Fibonacci to see exactly what it is. 4205.75. So consequent encroachment is 4205.75 for the opening range gap. So 3 ticks off of the consequent encroachment of the opening range gap. Like I said, we poked into the little liquidity void because there's no price in between this candle and that candle. This candle is low and this candle is high. There's no price in there. And when we came up on this 9 o'clock candle, we poked just above it. We had a little mohawk there. If I come over here and put that line there like that, you can see that we got a slight little mohawk above that line. Pushed into the liquidity void, and then now we've come back down, filled this hourly SIBI. We filled that hourly SIBI right there. Nothing down there on the 15-minute. Nothing down there on the 5-minute. 4, 3, 2. Nothing down there. Yeah. See on the news counter, we came down, took out the sell side, came down, took out the sell side, then took off and went up, took out the buy side, stayed above the buy side, had a breaking market structure there, pushed back up, then started to come back down. So let's see what happened once we take this sell side. All right, so since we had a breaking market structure there, pushing down, want to see what we do once we take this sell side. Why do I want to see what we do once we take that sell side? Is because this consolidation right here, I'm using that as the start of this market maker sell model right there. All right, so we came down, did not take out the sell side. We hit the short-term sell side right there under the consolidation. Then we took off, right? Come up here, reversed, right? Your low risk short right there. Came over here. What's this, like distribution, second stage distribution, right? Whatever, whatever ICT called is. I can't remember the different names of it. I think it's like distribution, second stage distribution, and then once it run below this and maybe even tap into that, that's what I'm looking for once it get there. If your model allows for it, right? If we get like a push off of, this here without taking out that low and leave some type of imbalance over there, you might be able to maybe take a short into that low if your risk allows for that. But I just want to see what it does once we take out this low and maybe that low there, the sell side, the actual sell side over here from the London. right? Once we take out the London sell side, because we already went up and took out the London high and the Asian high. I think this was the Asian high. Yes, it was. So we already went up, took out the London high and the Asian high, reversed that yesterday's low inside the opening range gap. Then now we're coming back down. So all eyes on the sell side down there, but I want to see how it reacts at this sell side. You know, what does it do when it hit this sell side? Does it show a willingness to continue to that London low? And then once it hits that London low, what will it give? What will it give? That's what I'm looking at. So the London low is 41.71 for the people who need the levels and aren't visual. The low where I say I want to see what it's going to do when it get to it is the Newsweek low at 41.75.75. Yep, 41.75.75. Let's see what we got going on above price here. So right here, what it is, we're getting ready. We're working on this right here is going to be a potential balanced price range right there because we're working on a SIBI here on the 15-minute. Working on a SIBI here on the 15-minute. Now on the 15-minute, we would need to take that low. We would need to take that low on the 15-minute for the 15-minute to break bearish. All right, we would need to take that low for the 15-minute to break bearish because this is the low that took out that high with displacement. So we've come back to the imbalance. Right, come back to the order block. Now we would need for we had mean threshold of that order block. Right, so the order block is doing its job. 15-minute will need to take that low to break bearish. Right now, this order block is doing its job. We're working on. We got 2.5 minutes left. Working on this SIBI right here at the 9:45 candle. I'm sorry, y'all, if the candles are really small when I go to focusing. There you go. So again, need to break 41.75.75 for the 15-minute to break bearish. Right now, we've come down to mean threshold of that order block. The low is 41.77.25. Mean threshold is 41.77.50. So we got a little mohawk on that mean threshold of that order block. On the 60-minute, also we got that order block there that we're, if you look at the entire order block, if you look at the entire candle, mean threshold is 41.76.25. And then if you look at just the body, we got 46 minutes before we close on this candle to see if it respect that. That's hourly candles. On the 15-minute, we have a minute. We got a minute left to see if we're going to respect this mean threshold of 41.77.50. What is this? Minute bearish for value gap. Push through. Got a lot of stuff going on. That's why I deleted that. There's a tiny little 15-minute fair value gap. All right, man. That's all I got. Do anybody have anything for me before I call it? Does anyone have anything for me before I call it? If not, y'all already know what the lick read, man. If not, okay, 15-minute has closed. We got a Sibby right here. We're still respecting that order block. Still respecting that order block. Mean threshold. Again, that mean threshold is 4177.50. The low that it needs to displace below is 4175.75 on the 15-minute. Then the sell side is at 4177. I don't see anything in the chat. What you mean YouTube hates you? What happened? What happened? Well, YouTube don't hate you. YouTube love you. Wait a minute. Can you bring my ID? I gotta go, y'all. My son left his ID. I'm sorry. I just saw he texted me 5 minutes ago. He texted me 5 minutes ago saying he left his ID. I got E-Rock. Are we friends on Discord, E-Rock? Are we friends on Discord, E-Rock? Yes, we are. We friends on Discord. If you get your Discord notifications, E-Rock, whenever I get ready to do a live, I'll send you a I'll send you a DM on Discord saying, "Hey, I'm about to go live at such and such time." If you get your Discord notifications, because you say YouTube don't be showing you no love, so we'll try to do it like that. I'll see y'all on the next one. I gotta go take my son his ID. If you're gonna trade, please trade safe. If you're not gonna trade, please take copious amounts of notes so you go back and study the things that you saw today. Until then, Aranya Grande out. Yeah.